All right. Well, thanks for having us all up in here. It's been a great event. By way of introduction, my name is Matt. We lead business development at Gauntlet, a financial modeling platform for DeFi. Turn it over to our panelists here to introduce themselves.
Hey, Alex Guttler. I lead partnerships at Paxos.
James Glasscock, I'm head of ecosystem at Reserve Protocol.
Keong here, associate partner for EY, Assurance Blockchain team.
And Stephan Lutz, CEO of BitMEX.
Yeah, so last panel, but certainly not least. Thanks for you guys for joining. And I think first, as kind of the title of the panel, incentivizing adoption. I guess let's go around and just say, what is like your current view on the state of the stablecoin ecosystem, and what are some things that you think now and moving forward we can do to bring more adoption?
Well, thanks to all the event organizers for putting this on. We're really excited to be here and glad to have such a big crowd, especially at 5 o'clock after a very long week for everybody. I think our view at Paxos, and if you're not familiar with Paxos, we're a regulated blockchain infrastructure firm. We have an office here in London and New York. We really believe that sort of V1 of stablecoins have been all about crypto trading and DeFi, which is what has helped grow it to over $100 billion in volume today. But really what we think the next iteration is that we're really excited about is use cases like payments and things beyond just the crypto world. And so, about a month ago, we launched a white label stablecoin with PayPal called PYUSD. And so, if you think about the roots of a company like PayPal with 400 million users and 35 million merchants, there's a lot of really interesting things that you can do with stablecoin. And we really believe that the next wave of stablecoin adoption is going to be focused on that. And if you really look across the digital asset landscape, that one of the only things that has real product market fit is stablecoins. And so I think we're super excited, and it's been interesting having conversations the last month since this launched with the big card networks, the remittance companies, payment gateways. Everybody is excited about sort of the future opportunity of stablecoin, and people can see today how you can save money, save time on transactions. And so to us, that's kind of the holy grail, is starting to see it outside of just the crypto ecosystem.
Yeah, no, I think that's interesting. I think a lot of us saw PYUSD, and especially being US based, seeing a US based company kind of enter the market in a big way with such a history in the payment space was exciting for a lot of people. For companies like PayPal, and then we'll move on and get some perspectives. As they try to launch this, grow it on chain, they may have limitations, things they can do. What do you think helps, or what will help trying to drive the adoption of PYUSD and growing liquidity on chain?
Yeah, it's a good question. So really there's kind of three vectors of growth, and really I'm just telling you what our strategy is for growth over the next couple of years. So the first step is make this ubiquitous across all PayPal services. So that's, the 400 million users through the normal sort of retail PayPal app. Venmo will be launching soon, which is another 90 million users. And then all of the payment services, PayPal has the Honey loyalty platform, the Zoom remittance business. So pretty much everywhere that PayPal is, you will be able to find PYUSD. So that's part one. Part two is basically make it ubiquitous across the crypto ecosystem. So really the sprint that we've been in for the last 4 or 5 weeks has been exchanges, CeFi exchanges, DeFi exchanges, custodians, wallets, market making, make it easy to get, basically, because if it's not everywhere, then the utility is very limited. And the third part, which I think I'm most excited about because I think it's the most impactful sort of on a global scale, is what I would just call global platforms. So that's payments companies, remittances companies, payroll is something I'm super excited about, and we've seen a lot of interest in. The card networks for settlement, both on the merchant side and the acquiring side. So that's really the three pillars of how we plan on growing. And you have to sort of juggle the balance of, clearly we need to grow the assets under custody so that there is utility and people actually care about it. But we also really are focused on driving real world adoption and use cases. And so that's how we're focused on growing.
And James, I know, coming from Reserve, you guys take a little bit of a different approach to stablecoins in the market. Had some pretty exciting releases in the last kind of year and change. How do you kind of think about stablecoins from your perspective, kind of given what Reserve enables people to do, between like permissionless stablecoin and launching these, like where do you see kind of the biggest growth there? And do you think, it's we're going to see a lot of different stablecoins, or do you think, it'll kind of converge on a few of these?
Yeah, thank you for having me. And for those who are not familiar with Reserve, our mission is around expanding access to inflation-proof stable currency around the world. We do it in two different ways. Some of you may be familiar with the Reserve app or RPay in Latin America. It's in 18 countries. It's powered by a stablecoin underneath. The users don't even know they're using stablecoins, and they're not crypto users. Folks are using it to shield their wealth from, inflationary currencies in places like Argentina and Venezuela and so forth. And then there's the permissionless protocol, which is where I spend 100% of my time. The permissionless protocol, and I'm super, excited to be like with this group too, is really a platform to white label stablecoins for anyone to roll their own stablecoin. These are asset-backed currencies. They're one-to-one asset-backed on chain, decentralized. They come with some over-collateralization, and there's some really cool things you can do with revenue sharing. And to more specifically answer your question, the part that we're really excited about is this idea of programmable money. And when you think about money up till now, medium of exchange, unit of account, store of value, I'd argue these are kind of industrial age paradigms, right? When you move into digital space, and you've seen this in a lot of other industries as digital has come online over the last 25, 30 years, when you can do things in digital, your production costs start to go close to zero. Your distribution costs start to go close to zero. And when that happens, it unleashes a whole lot of creativity in ways that people can't really contemplate, right? When YouTube launched, no one really knew that it would end up being 37 million video creators and then 10 other platforms that have copied it since then. When Shopify launched, people were like, well, we have Alibaba and Amazon. Why do we need that? And now there's 1 million merchants on Shopify. So these platforms that are permissionless or semi-permissionless, they unleash creativity in ways that I don't even know, and our team doesn't know. In fact, we've kind of really taken the position that we are not going to launch any of these asset-backed currencies. Our role is to cultivate a community of entrepreneurs, apps, protocols, funds, TradFi institutions, and do a lot of experimentation and sort of see what comes out of that. So, I think there's some folks think there will be one stablecoin to rule them all. That may be maybe in many decades from now. Who knows what the world looks like right then. But we're in this great unraveling of the financial system right now, and there's going to be thousands of experiments. There's at least 100 stablecoins right now. It's probably going to double in the next 18 months, and it's going to keep growing pretty rapidly. I don't think there'll be millions of stablecoins, but there'll be thousands of them.
Yeah, and Stephan, I think you sit in a pretty unique spot here. Like you're not issuing stablecoins, you're not creating stablecoins, but you have a very popular trading platform, and you want to grow volume, traders, users. How do you kind of view the stablecoin market between kind of the newly launched stablecoins, the ones that have been around, and when you're thinking about BitMEX's growth, like how do you think that'll tie into that? And then on the other side of that, what do you hear from institutions when they kind of talk to you about stablecoins?
Well, if I argue from the utility of a stablecoin for a crypto trading platform, regardless of where you are, basically, it's actually solving one issue, and the issue is valuation. It's not the unit of account, it's not the store and transfer of value. Just make sure that people that are not capable or not willing to evaluate or, let's say, price their positions every day, for example, based on Bitcoin, they use a stablecoin because it's easier. This is basically not even a use case. This is more something for comfort, right? So the second use case, so to say, why crypto trading platforms accept stablecoins is actually because they provide to the users a good measure of it's called fiat on and off ramps. So the exchange between the fiat world and the crypto world, right? You could even say, I don't even like the word crypto. It's just a translation mechanism so that you can go with your US dollars, your Sing dollars, euros. I'm from Europe. Your euros, you go somewhere, it's translated into a digital representation of that, right? So I can use the funds I have, I can translate it into the digital space, and then I can use it. And it's not even just for trading some funky stuff like on our platform, like crypto derivatives, right? So in this actually is an interesting piece that calls for a limited number of stable coins that have an overall market cap. Because if we would be to accept, I mean, it's possible for the valuation like 30, 50 stable coins. So I'm actually with you. I think we will see much more stable coins to come. But actually for the trading industry, it's better to have a limited set of those, because technically you need to integrate, you need to make sure that you cooperate with the on and off ramping providers, that you have the accounts, et cetera, and this provides, again, complexity, right? So we are looking into the industry. We're basically continuously evaluating what to add and what not to add, basically. This is from our own perspective. When I talk with institutions, there is another one. It very much depends on who you talk to. If you talk to already, let's say, digital natives, right, or more digital native ones, they are completely fine with the concept of stable coins. The next big thing I assume, because we have rising interest rates, is interest-bearing stable coins. However you do that. I know it's a matter of delineating between securities and non-securities. There is something around it, but you need to play around with it, because that is basically a super use case, especially for trading, converting, and store of value. Because if I transfer, just as an example, $1 US into nowadays mostly Tether, Circle, and some others like yours, right? Then I forgo, let's say, 5% riskless yield on treasuries. So I always need to say, do I convert into stablecoin and let go of 5% riskless return? The moment you bring that together, I can do something with it, and I get maybe not 5% because that's not possible, but I get a fraction of that. That will be a super use case, I guess, number one. Number two, if you then talk to the non-digital native institutions, they have a completely different issue. They don't even get stable coins. Why? Because if you are just, imagine you're a TradFi bank. Your whole accounting and operation system is non-DLT connectable. And this is their issue. They wouldn't have even an issue to have the valuations and stuff. So I think that's another one. The service provider who bridges this in the most elegant way will win a big market share in the world. And the funny thing is here, it's a complete deviation between the institutional world and the end users. I would say 2/3 of the world population feel very comfortable in using those ones and have stable coins on a distributed ledger, on a blockchain, however you do that. It's much easier for them than actually getting a bank account. But if you talk to classical institutions or big industrial companies or even consumer companies, it's exactly the other way around. They have all the infrastructure in place to deal with banking relations, to deal with their accounting programs and enterprise resource programs, right? But they struggle in connecting that to a digital infrastructure.
Yeah, and I think it's interesting a point you make on different types of institutions. I think it's really easy for us to say institution and think of like every institution kind of looks the same, but in reality that is just not the case. And Chee, Keong, I know you kind of sit in the middle of this, and so you probably talk to a lot of these different types of institutions. What are the types of things that you hear from them, and would you agree with the assessment of there are like certain types that are going to be more prone and certain ones that aren't, and how do we take the ones that maybe are a little bit more hesitant or maybe have some barriers to entry and give them an easier path forward?
Yeah, certainly. So, I mean, from what our audit clients and what we see from the market, like what Stephan mentioned, right? Those who are digital native, they already know what is crypto, so stablecoin acceptance is not an issue. But when it comes to the other clients, the other institutions that are non-crypto native, right? You try to explain to them, I think, yeah, it's very hard. I think first of thing, we need to get the education in place, right? You need to, and then they will ask you the question, so what's in it for me? Why do I need to invest, all my systems are ready with the traditional TradFi payment rails and all that, with the banks, the connectivity. What's in it for me to go into stablecoin or DeFi, you know? So we have to think of some kind of a killer app, I think, suppose that can incentivize them to move to this world. So maybe whether it's in the form of productivity increase, cost saving, or faster time to market, something that we can get them excited. Because if not, they're not going to make the investment. And of course, for the users, I don't think they will want to. I mean, all of us for retail, of course, we will be happy to tangle with the wallets and all that. But for the general masses, I don't think they want to have another wallet, right? Or how to secure their seed words and private keys and all whatnot. Yeah, there's too much hassle for the general people in common. So they need to find a way we need to make this bridge across, to make that transparent for them, such that the stable coins or whatever coin we call it is working seamlessly behind the scene, right? And when it comes to stablecoin, actually there are many types of stablecoin, so we need to also define carefully what kind of stablecoin. Is it the asset-backed one-to-one? Is it single currency? Is it algorithmic? So all these would require education to the institutional players so that they can make the careful choice of what kind of stablecoins they want to use, if in the first place we can get them to use. Right.
Yeah, you bring up an interesting piece around. Or Stephan, go ahead. You wanted to say something?
Yeah, one thought. I don't want to stretch it too much, but it's something I really like talking about because I come from TradFi and central banking, and what I've found interesting so far is if you look at stable coins, actually for me they're basically in the beginning, if you take away all the business impact and such, actually it's a predecessor to a CBDC. That's number one. Because if you would have a CBDC, just let's say a digital representation of any currency, you could use this. Then it's the connection mechanism, because the CBDC won't work on a permissionless blockchain, right? So then it's the second one is that what's the right English word for it? So not translation, but this, like a ferry, it carries you from one side of a river to another side, right? But then it's really in the end about this: what happens if we have interest-bearing stable coins again? If we have baskets, right? This is, I think, something, or even commodity-backed stable coins, right? I think this is where the industry potentially goes to. And then as I said, I agree with you in a way, but it's not so much on education. I mean, if you look at it, I just need to make that comment. It's hilarious sometimes if I speak to my old colleagues from my old jobs, right? And we don't know how to control. And I'm like, what do you want to control? Yeah, just for an example, what is with the end of day bank account reconciliation and finance? I'm like, you don't need it for stable coins. You just look onto the chain, and they don't get it. Right? It might be education, but I think it's more like this flexibility, and it will come. The more retail users will use it, they are just forced to onboard with stablecoins.
Yeah, I think to the last point you were making, there's an assumption built in the question that you have to or are going to be successful in forcing big traditional institutions over. And I think probably what you're going to see is the people on the front, whether it's like, startups or like, I'll take payroll, for instance. I was just talking to a company yesterday based in New York that's a crypto payroll and compliance company working with, people paying contractors cross-border. And he is going to move so much faster than ADP or Pioneer or somebody else. And so I think I've spent the last year with MasterCard selling a product into traditional banks for the banks to offer crypto to their end users. And it's really hard because these banks are, in some ways, and no offense to anybody who works for a bank, they are the hardest customer segment to win because they are the most risk averse. They are the most slow moving. And so in many ways, it's a very challenging thing. And so I think one way none of us know how it's going to unfold, but I think we're talking about, adoption and driving institutional adoption. I think it will probably be other people going first. And I think as we've been selling this product to banks, everyone is asking. Like we've talked to over 100 banks with MasterCard, and probably in the next couple of weeks we'll hopefully get our first one in Latin America. But everyone's question is, who else is doing this? Who else is doing this? And so no one wants to be there first to stick their neck out. And for good reason. Like you've worked in this world. I've never worked in a bank. That's why I look so young. I'm 65 years old. But I think that's just something that's a reality. And, you know, they're trusted institutions for a good reason. They're not known for being the most innovative, but I think some will be innovative. And now you're seeing, you know, some people like in the US, Lead Bank, which, you know, one of the leaders in Square left and basically bought this bank in Kansas. And they are meant to be like a very forward leaning bank. And so that's another interesting way to see adoption of you having someone take over a very traditional type of organization and make it current, as opposed to, you know, from inside JP Morgan trying to make that like the most innovative company. It's hard.
Yeah, I totally agree. I think when you look back at like the history of innovation in any category, and particularly in digital, you'll find these early experimentors. They go out and fail quickly. A lot of them are going to fail, and people talk about it a lot in crypto. Lots of these things will fail, but that's how we learn in a much more rapid way. And that's something that entrepreneurs can sort of afford in a way that a Fortune 500 company cannot or will not, because you know, the folks, that's a different sort of incentive structure there. But I think it's, as I expressed to you, is like look to the fringe of what's happening in crypto, and you'll start to see these really interesting experiments, because we don't really know, is it going to be, you know, yield-bearing assets, or is it going to be the assets that have the best proof of reserves? Or is it going to be the assets that have the best privacy? We don't really know what angle is going to take off. They all sound like good angles, and you know, depending on who's selling you which one of those angles, you know, that'll be the thing, right? But it'll be interesting to see what sort of plays out in the market. I think looking back at like the history of stablecoins and the rise of Tether and USDC and everything that's followed since, you know, it's interesting just to see like how they came to market and built their initial scale. Which, you know, was, both of them were piggybacked on exchanges, and that worked great, you know, for where they are right now. But now we're moving into this new realm where you can start to play with the programmability of the money and do some really interesting things with it. Even with like PayPal, I have a feeling a lot of people are going to be using it on PayPal and Venmo, and they're not really going to know there's stablecoins underneath, is my guess. They're just, it's like maybe the fees are lower. Yay.
Totally. And one thing I have to say to your point about experimentation, every company I've met with over the last 5 weeks, one of the first things I say is, this is all an experiment. And this is PayPal. It's a top 10 financial institution in the world. And the reality is, like, we have a lot of theories and hypotheses. And so far, the market has been like nodding their head and saying, yes, we think this makes sense and we're excited about it, which has been awesome. But the reality is, nobody knows how it's going to play out. And I think it's really important. Like, I insist on saying that in every single meeting, because I think it's important that people know that, like, there's a lot of possibility here. But to also something you were saying, like, we view PYUSD as a platform, and the most interesting things are going to be the things that are built on top of it that we had no idea and didn't even imagine. Sure, PayPal will do some innovative things on top of it, but really what they're most excited about, I was just with Edwin, the CTO, 2 weeks ago in California, and he was like, I can't wait to see what people are going to build on top of it. And that's the fun part of innovation and platforms.
Yeah, and then for my side, yeah, the sentiments, I agree with the gentleman here. So when we talk to banks also, yeah, they are the very risk adverse, definitely, and they are all doing just POC, you know, testing out things. But we told them that you can start small. You can start. You don't have to start big, and you don't have to involve other players. So start with the low hanging fruits, things like tokenizing your own deposits. That's one thing, and I can see that trend is catching up. So banks are tokenizing your own deposits. So yeah, if you want to call that a stable coin, then yes, you will see more stable coin if each bank launch their own coin as a deposit. And in fact, in the MAS consultation paper on the stablecoin, right? Initially, they wanted to consider banks' liabilities, that means the deposit, as a form of stablecoins. Yeah, but that was eventually struck out in their response. Yeah, but initial consultation paper, they do actually consider, right? Yeah. And that is a different kind of stablecoin, actually, to be fair. That's why I mentioned there's different kind of stablecoin. Because the stablecoin that is issued on bank's liability, you face the bank's counterparty risk. Right? If the bank fails, then there goes your stablecoin. But if it's a stablecoin that's issued one-to-one back to the reserve currency, then it's a different story. Yeah.
What resonates with me is your discussion about there will be different use cases for it. And that totally resonates with me. I mean, I come from, let's say, an industry in that space that has a very clear use case. I believe that most of the trading institutions would love to see a stablecoin that's somehow interest bearing. I mean, again, not opening up the securities discussion, it's slightly different, right? Where I totally agree. I mean, if you're a merchant, probably it might be privacy, right? Or like with PayPal, it's a remittance piece. And what then even resonates more with me with my business is, hey, you need to exchange between those, right? You need to be able to switch between those, because depending on who you incentivize in what way, they will adopt different stable coins. But then in the end, you need to be able to exchange between or translate between them, and then in the end to fiat on an off ramp, right? And there will be a lot of business for other players as well.
Yeah, we talked a little bit about starting small and experimenting, and we think about something like incentivizing, and incentivizing something comes in a bunch of different ways, right? One way could be as you start small and experiment, you see some success, and that's your incentive to kind of dive right in, or maybe expand what you're doing. For some of these smaller experiments, or starting small in general, what does success look like for kind of the folks you talk to? What are they measuring? What are they looking at? What kind of time period? And I guess conversely, like, what are the things that if they might see that, they might kind of kill an experiment and say, we're going to wait for this. And maybe we'll start with you.
I've been talking a lot with people this week about that. Like, we were in an office earlier today with a company that does a lot of physical card payments for digital assets, and they're live today, and you can walk into many locations here in Singapore and around Asia and use crypto to pay for things. So I think that's an example of getting the PayPal stablecoin as a payment option there and having volume. And the thing I told them is, like, we in PayPal don't care if you run $1 million or $50 million of transactions. I really don't care. Like, sure, we will make more money if there's 50 million, but I would rather see 3 things that are doing $1 million of volume even in a month than I would one thing that's doing, $20 million. Because I think we are really, really focused on just proving these real world use cases. And clearly you have to balance that. It's not like us or PayPal are allergic to making money. But I think you have to prove that this stuff is possible. And I think what we've seen in our business, and it's funny because it sort of started with PayPal in October of 2020, which was they launched a business to let people buy, Bitcoin from their PayPal and their Venmo accounts. And that really unleashed a wave of companies coming to us saying, hey, we want to do exactly what PayPal did. And, Mercado Libre and Nubank and Interactive Brokers and all of these companies came out and, said, we want to be able to offer crypto to our users. And so I think when you give people, and this is like about what we were talking about, with experimentation and starting small, when you have something that people can latch onto and they see as a use case and they think like, oh, we could do that, but tweak it in this way, it just shows you what's possible. And so I think that's the way we think about it. And so success to us is just like a real world use case. And part of our plan, to be transparent, is to bring these out in, the media, like to have, if you can imagine, like a Nubank customer in Brazil sending money to, a Western Union account in a bodega in Mexico City, and his mother comes and gets money out of a physical location. That's an amazing use case where the fees are dramatically lower. And, thinking about the impact that has on somebody's life, that's that's a really exciting thing that I think shows people what's possible. And whether that's on the consumer side, it drives demand, or on the other institutions and retail and stuff like that who sees it. I think that's what it's about, sort of inspiring these use cases and people to say, aha, I get it. Now I want to go do my version of it.
Yeah, James, I'm curious to get your perspective, given the way Reserve is set up, kind of allowing for the permissionless creation. How do you, I guess, like you guys, but your community and kind of the folks around Reserve view success here? Is it a lot of different stable coins looking at varying volume? Is it what's being built on top of those? What do you see as like the life cycle of some of these stable coins, and like where's that curve on where they sort of have stable adoption and kind of move forward from there?
Sure. And I think that aha you just spoke about is really key. For those, everyone in this room probably owns some crypto, is my guess. And there's a journey, and you go to the holiday dinner, you tell your family about Bitcoin or stable coins, you tell them 100 times, they don't get it. But once they own it and they have that aha and they see it just kind of move up and down, maybe, a little bad news here, a little good news there. After a while, you start to get, oh, I see what this kind of really is. And I think this really applies also to what we're talking about with stablecoins. The Reserve protocol is very decentralized. So that is also kind of an acknowledgement that institutions are not going to jump right into highly decentralized technology on day one. And there's kind of a curve that we look at in terms of the personas. And I think, Chee, you kind of alluded to it. Like certain institutions will be ready for more risk, while others will kind of go quite a bit slower. But these personas that we think about for building asset-backed currencies on Reserve, they range from DeFi natives, entrepreneurs, protocols, and apps, right? They're fully kind of crypto-pilled and raring to go. And then we start to get into like funds and TradFi institutions, maybe rewards programs, putting their points on chain in a stable fashion, maybe video games and metaverses, moving their currency into some type of on-chain environment and being stable, and then eventually governments, of course. But those latter groups that I just mentioned are some of the most conservative groups. They're not going to be sort of jumping in headfirst on decentralized currency. So, what we're doing is building TVL slowly, with use cases in core DeFi, with liquidity providers and funds, wallets, apps, DAO treasuries, right? DAO treasuries maybe before Fortune 500 treasuries. The Fortune 500, they might be getting that service from Goldman Sachs or Galaxy, I'm not sure. Maybe from PayPal or Paxos, actually, or BitMEX. So that's how we go about building that. And it's really one of the challenges with this is this idea of building Lindy effect, right? Time and sustainability in the market, which really takes years for people to recognize an asset is here to stay. And, I remember in 2017, 2018, 2019, a lot of people thought, oh, Bitcoin, the government's going to stop it and et cetera. And they've kind of just quit saying that now. Like even the government says Bitcoin, it's like a commodity. It's here, and we're about to see a bunch of ETFs. It only took 15 years. So I'm hoping we'll get there faster with some of the stablecoins we're working on and that folks are going to work on here. But it does take years in the market of proving yourself, building trust. And yeah, that's the journey we're on.
I think for me is it depends on which country you're talking about for stablecoin adoption. If in the case of Singapore, where there's already so many ways of paying, different parties, whether it's institution B2B or B2C, there's e-money, there's all the different wallets that you have in Singapore. So the use case of a stablecoin is a bit hard to define. Whether that's why I mentioned about whether there is a killer app or killer application that can incentivize the traditional institution to really adopt stablecoins. But in the more developed world where their currencies are fluctuating, high inflations, then having a stablecoin, yes, would be something that people would look forward to for faster payment, more stability as well in terms of their income. Yeah. So I think it depends on the country. how to. So each country has different ways we can incentivize them to adopt stablecoins.
Again, taking the viewpoint of, I mean, we're not a financial institution, we're a crypto exchange, right? But there are similarities. I think the key will be, as long as we don't have that 10, 15 years history, and we saw that with Circle and Tether, basically. This is the journey they went through. Until we have that, it's all about the minting, redemption process, and the real pegging. If that works, you're on good track to be adopted by many people. Then it comes to the use case, and you're correct. I'm of the same opinion. It depends on where you are and what your use case is, right? But every time you go cross-border, actually you have it. Or let's say not cross-border, because I'm come from Europe, so you can go cross-border but still have the same currency, whatever you think of it. But it's like if you go cross-currency, then really, I mean, I'd rather transfer my money from here to home or to wherever with a stable coin than using the banking system. And it's not a fault of the banking system, it's just by design.
Talk about different countries, different use cases. I think when I think of different countries, I think of regulatory environments. Chee, Keong, you speak to institutions kind of all across the world. What is your take on kind of the current regulatory environment? And maybe we'll keep it simple, like think about Europe, the US, and Asia, and where you think is kind of doing the best job in kind of helping bring stablecoin adoption, and also what you think some of the countries lagging behind should be thinking about in order to bring more institutions forward there.
So, I mean, institutions, all they want is clear direction, stability, right? Clear direction for the government, clear policies, regulations. So in countries that have clear regulations on how stablecoins are to be issued, to be regulated, I think that's where the more adoption we'll see. Whereas in countries that are not so clear, then yeah, it's hard for business to do business, right? Because you don't know what happens. The law might change tomorrow. Then what happens to your stablecoin, right? So yeah, those countries like Singapore, we have a clear regulatory framework on stablecoin. Then of course that's where you can start issuing your stablecoin. But of course that is only for single currency. If you are thinking of issuing algorithmic stablecoin or basket of stablecoin, then that might not be the place. Yeah. So it all depends on what kind of stablecoins you want to issue. Yeah. Is it a single currency, 100% reserve back, or is something else?
Now, Alex, I want to bring this over to you. Given Paxos is registered, very active in the U.S., fellow New Yorker. What are you kind of seeing in conversations on your end and kind of hearing from your side? Given we can all read the news and kind of see what's going on. I think we only get a top line view. Would you say that you're kind of relatively bullish or bearish on kind of the U.S. environment as it relates to stablecoins?
Well, I would say before I'm a New Yorker, I'm from North Carolina, and my home state has a politician, McHenry, who's been very positive in supporting stablecoin legislation that's been rolled out, recently in the U.S. as a proposal. It's not accepted yet, but I think we are making steps in the right direction in the U.S. As people have been asking out here, like, what's going on in the U.S. with regulation? I'm like, well, I think we might have hit a bottom point that we have nowhere to go but up. But it's exciting to see things like that come out. I mean, you've heard very loudly from Brian Armstrong from Coinbase over the last couple of years, really, like, please, we are begging you, give us regulation so that we can follow it. And the absence of regulation and regulation by enforcement just doesn't really help anybody. And so I think, we're obviously supportive of that and work with regulators. But, I think our response, and I don't know that I would say we've been really public about this, but I think in a post-FTX world, which you can't have a panel without saying that line, in a post-FTX world, redundancy is the most important part of every single one of our businesses. And you have to have, for some people, it's banking redundancy. For other people, it's regulatory redundancy. And I think if you're operating a regulated global business, you have to be able to operate that business regardless of what shifts, so that if things in America or things in Asia or things, in the Middle East or in Latin America go a certain direction, that you can continue running your business. And so I think having that redundancy is something that's a key priority for us as a response to what we're seeing in the regulatory landscape.
And James, so thinking about kind of like a decentralized protocol that's focused on this, I mean, we've seen over the past year or so that even some decentralized protocols aren't necessarily immune to regulatory scrutiny. How do you guys, how does your community view that? And are there any kind of steps that you take or others who are thinking about issuing stablecoins can take to get people more comfortable with adoption?
Yeah, it's an interesting one. The protocol is a set of smart contracts on Ethereum, and the way it works is anyone can mint and redeem the collateral. There's no actual middleman in there. What we encourage people to do is to think about what the laws are in their jurisdiction. It looks like, I think it's really exciting to see what's happening in Singapore and Dubai from a lawmaking standpoint, clarity standpoint. Looks like the UK and MiCA in the EU are leading the way as well. Typically, and I'm not a lawyer, so this is definitely not legal advice. It looks like a lot of the regulatory priority is around centralized issuers to start. Any type of regulated entity, any type of existing bank or someone who wants to be a bank. There's a lot of conversations around what will happen to DeFi in the future. I don't know what that's going to look like. Our view is to play it safe, to encourage people just, talk to your lawyer about the rules in your jurisdiction about how you use these protocols.
Just to add a little bit of flavor and spice here. While the regulation seems to progress to a little bit more clarity in the different jurisdictions, some faster, some slower, I think it won't change, right? Personally, I think they don't get it. Because what they do is they treat it as if this would be banking business, which it isn't. Of course, you need to be sure that the cover pool is there. So I agree with all the stated goals, but not with the measures. Meaning, regulation has become all over the place, often very prescriptive. And as a European, I worked on other parts of regulation. It's always prescriptive. Whereas, I worked a decade for PwC as the capital markets lead in Europe. What order to say is substance over form, but we have come to a regulation that puts form over substance. Because in the end, it's about the cover pool, but in the end, it's about the protocol. And no one looks at protocol, right? Which is a completely different thing. And it's due to the fact that regulators, and I don't want to criticize them, they can't do anything against it, but they are not there yet, and they haven't gone the way. They tried to regulate it like paper business before. Actually, it's digital, but it's not paper business. It's something else. It's automated, right? You need to be able to look into the protocol especially for the DeFi world, to see what's really there. And then you can evaluate, then you can see how you want to regulate. Instead, we get prescriptive regulation that is very well suited for bigger financial institutions, but not for any kind of decentralized global business models. Sorry.
I was just going to say, I agree with your position on it. These experiments that are happening, as I mentioned earlier, a lot of folks for a long time said that, Bitcoin would not last, and now it's accepted. And so I think the question is what's going to move faster? Are, the Congress and the regulators going to step up and provide clarity faster, or are the innovators going to go out and create interesting things that change our minds about what the future of the financial system could look like? Don't know what that's going to look like, but I lean to sort of a latter side of thinking that might move a little faster so far.
I think two things. One is the crypto industry has done itself no favors in the last year, which makes it very easy for people to point fingers and say, you see, I was right. Like everybody is a criminal there, so that's not great. And hopefully, maybe this last cycle flushed out some of that. But the second thing that I always say, and I, personally engage with regulators, and our team spends a lot of time with regulators, is nobody downloads a file into their brain that says this is everything you need to know about digital assets over the last 15 years. It all comes through education and discussion. And, if you think about it from their point of view, it's the same as, if we or you or any of us are trying to partner with an organization and you have like the digital assets lead inside that bank or inside that company, that person is really sticking their neck out and a lot of pressure is on them to get it right. And I think with the regulators, it's a similar kind of pressure where there's a lot of pressure to get it right, and it's hard to, please both the rest of the government as well as the constituents as well as the industry. But I think engaging and educating is really like incumbent on us as the industry to help people understand how this works, like what's safe and how regulation really should work. Because otherwise we can't just yell at them and be mad and expect anything to change. Like it has to be a discussion, I think.
Well, just to correct, I didn't mean that. So I totally agree with
Yeah,
you.
I'm not saying you did.
But in the end, it's a two-way street, right? The other side needs to have a certain willingness and curiosity to get down to the point of it, and then coming back and say, okay, what do I do with it in terms of regulation? I worked in that space for a long time, and I just didn't throw everything overboard, right? So, but we still have a way to go to do that. Exactly.
I think that's
have two-way conversations, right? Where both sides are listening.
Yeah, you have to have someone educating and somebody else has to listen. If you're not willing to listen, then you're speaking to a wall. Yeah, I totally agree.
I think a lot depends on the market itself. So I think right now to the regulators, what's the thing that come to their attention is the centralized exchanges. The DeFi side is not that big yet. So they will say, okay, I may take a while. Yeah, and it's a bit complicated for them to understand, right? So that is probably not on their priority right now. The priority is to go for the bigger players in the crypto world. Yeah. So, but I have to say, to be fair to them, they do try to find out more about the DeFi and all that, but then I think they still haven't get a hang of it or how to really regulate this piece. Yeah. But that's why they're going for the centralized exchanges and all that first. Yeah.
We are just about at time.
To your point, but I just want to add what I find very promising is that at least for the backed, so for the fiat backed stablecoins, they have been performed overall, at least from the perception of the bigger market, much better than the crypto industry as such. So that might play into this discussion, that it might be a little bit more constructive in the end than on the other side.
Yes, we're just about at time. Want to give people an opportunity. If you do have a question, feel free to raise your hand. Got a great cast up here and super interesting discussion. Looks like we have one.
Sorry, I just have a quick question about maybe the future perspective of the Tether, because actually I read an article recently, they describe Tether actually not as a stablecoin company, but as a global offshore shadow bank. So actually we can see a lot of restrictions right now on the Tether side. And actually I just talked to a guy from Fidelity. Actually they think one Tether, maybe right now they are 80 billion market cap. Maybe once they reach $200 market cap, maybe they will have some problem. Maybe the government even will maybe shut them down or whatever. So my question is can I ask what's your guys' perspective on maybe what's the opportunity for stablecoin, whatever the fiat bank or maybe digital asset bank, maybe what's the opportunity here for private sector maybe can explore.
Good question.
You're based here, so you're closest to Tether and probably see more of it than the rest of us, but that was an unfair throwing you under the bus for a question. So I guess I just volunteered myself.
I can start. I mean, this is a personal opinion, right? So no legal opinions in the background. For me, this is what I mean. How can you call Tether a global shadow bank? They don't operate personal accounts or current accounts. The only thing they do is switching from fiat into a digital representation of that. They don't even do the remittances themselves. This is what I mean with substance over form. And it's not even criticizing the ones that say that. I totally understand where they come from. They say, wow, it's maybe 100 billion depending on the market, right? It's growing so big. We need to do something about it. We need to bring that under control, but without really going into what it is. I mean, if you talk about what are the treasury operations of Tether, this is a completely different basically ball game, right? But if you just think about, they take US dollar, they create a digital representation, and then they give it to you. That's it. That's the core business model of Tether. Nothing else. It's not personal current accounts. It's not lending, basically. I mean, it's then what's in the treasury, but this is a market discussion more for the industry. Do you accept Tether? Do you like it? Do you want to use it? Which is a completely different matter.
I would also just say that I think the market's trending towards transparency, and so has Tether. In the last couple of years, they might not be there yet, but increasingly they are, and they will continue to in order to remain competitive. Because the players, we're really early. It's crypto is being used by less than 1% of the planet, right? We're in like the 1992 internet right now. There's going to be lots of other tethers come along, lots of other stable coins. There's going to be so much competition, and how they differentiate. Tether's got incredible network effects now, but AOL had great network effects in 1995. No one cares anymore. That opportunity around transparency and proof of reserves and things like that, I think it's going to be a huge opportunity for them to thrive along with all the other players in the market. So that'd be my guess.
My quick comment on it is just, I think it comes down to something Stephan said earlier, which is it's about what's your use case and what are you actually trying to do. Being in the US market, if you talk to like a company like MasterCard, for example, probably harder for someone like that from like a risk perspective to be operating with Tether, anytime soon, I would say, and most conservative, maybe like Western-based companies where Tether is not as big and people see it maybe as a bit riskier. And to some of the transparency points, if it's not quite as transparent as some other options out there, then for those types of corporate use cases, maybe it's not going to be as big, but maybe for the trading community it is, and that's fine. Like, to your point, multiple stable coins for multiple things, and people will choose their own, and definitely will not be one to rule them all because there's different use cases.
Yes, absolutely. I mean, to your point, why was Tether so successful? Personal view again, because the minting and redemption process worked well even in stress situations. They have proved so far, right? I mean, I can't look into that. I'm not at Tether, but that it works. I mean, we had with Circle basically the competitor from different jurisdictions, so you have choice. And we will see others. I mean, now with PUSD, let's see how this works out in the end, right? So we see the market moving. But as said, I would always apply these substance over form. What do they do? Not jumping to conclusions before having really gone into the workings of any stablecoin.
Okay, we have another question.
Hi, my name is Udera, and I run a real-world asset stablecoin called Elbow. And my question is this. So as an ecosystem, we speak a lot about the virtues of decentralization. And yet, so much of our ecosystem has been built on really limited number of fiat currencies, which by design are centralized. That's somewhat contradictory, and some would say a huge unpriced risk for our ecosystem. So what are your comments on this from the perspective of essentially we're building our treehouse in the back garden of the nation states that may see us as an ecosystem as a threat?
I think if I understand your question, it's around building, using these existing assets on chain that might be in a jurisdiction and might have some type of centralization vector or exposure to a specific regulatory environment. one of the opportunities is diversification of those assets and how you might use them. I'm not sure what you're backing your stablecoin with, but there's this really interesting opportunity to build baskets of assets that live in different jurisdictions. And, when a DPEG event happens like it did on March 9th, let's say USDC's in the basket, if it's only 20% of the basket, that's how much you have to lose. If it's 100% of the basket, that's how much you have to lose. So I think one of the opportunities is this idea of like diversifying what the collaterals are, diversifying the smart contract risk, the counterparty risk. That might be an approach to it. I don't know if that answered your question. I hope so.
I guess let me jump in. Maybe because I would say ideologically, at least I'm close to this. Not personally, but I understand it. What you basically mean is, hey, why should I use a USD-backed stablecoin if I don't like USD? Right? So I would turn that around. So totally get that. But then the question for the digital ecosystem is, what is the alternative? So for example, if you would go for this is more a not theoretical, but an intellectual discussion. But if you go for an oil-backed, just taking stuff, or let's say a diamond-backed stablecoin, then you could even use Bitcoin because it will fluctuate in value, and the only difference is how much it fluctuates against what you actually need. The second question is, can I do something with it? The interesting thing about the fiat-backed stablecoins is I can translate into fiat, back into fiat. And all of us, in a way, live still in a fiat world. There are hardly any farm-to-table use cases for a fully digital world. So I guess for now, I totally understand that there is a supremacy of fiat-backed stablecoins because that's what we all need. I mean, I pay my rent in fiat, right? And frankly, I don't have any wish to change that for the time being because it's overly complicated. But it's for this part in the world. It goes back to what you said. It differs from country to country, right? So, and as long as that is the case, I guess we will see kind of in terms of market cap, a supremacy of fiat-backed stablecoins in the end. Totally get your point, but I would say this is quite a journey to go, although it's a nice mental experiment to think of it differently.
Pegging to a currency is a fairly new thing. Pegging to this Schelling point, right, in the US dollar supremacy. I don't think it's necessarily the paradigm that defines what the world looks like 100 years from now. These real world assets as they come on chain, which is something probably a lot of us in the room are excited about, is seeing them on chain, seeing them at sufficient liquidity and hopefully even permissionless. You can start to build some really interesting currencies or tokenized indexes with those types of assets, and the value, the stable value, we call a stable coin, most people call it something pegged to $1. But that's just a concept that we've invented in the last couple of 100 years. The next, 100 years from now, the definition of a stable coin, there's a lot of conversation right now around flat coins that are generally stable in value, but they're not necessarily pegged to a fiat currency. There's a lot of interesting experiments happening, some of the speakers here. So maybe that's what it looks like 100 years from now, is a flat coin backed by a diverse basket of assets.
I think that was generally the point I was going for, right? Because even $1 is not worth $1 these days. And being backed by a diversified basket of assets can be still priced in $1. Liquidity being a different problem, but I think that's more aligned with where I was thinking.
All right. Well, I want to thank our hosts, I want to thank our sponsors, and want to thank all of you for coming up here. Really fun discussion. And yeah, until next time.
Thanks so much.